Could your Medicare coverage end up costing you more than you expected? Stick with me and I'll tell you why and what remedies you could have. Hi, I'm Jared with Carlin Financial Group. For the best retirement information and to help make sure you don't outlive your money, be sure to subscribe to our channel and hit the bell to be notified when we release new videos. While there are different reasons you may have to pay more for your Medicare coverage, in this video we'll focus specifically on the Medicare premium surcharges you may face based on your income. For those that qualify, Medicare coverage generally begins at age 65. If you've worked and paid Medicare taxes for the required 40 quarters, you're typically eligible to receive your Part A, or hospital coverage, free of a premium charge. If you've not met that 40 quarters requirement, you could potentially still purchase coverage, and that cost will vary based on how many quarters, if any, you did pay into Medicare. For Part B, or the coverage that helps you see a doctor, the medical insurance portion, there is a standard premium paid by most recipients. In 2021, that standard amount is $148.50. Now, for Part D, or your prescription drug coverage, the premium varies depending on the drugs you need and the specific plans that you find. So, how can your income affect what you pay? Well, this is where IRMAA comes into play. And when I say IRMAA, I'm not referring to your great aunt Irma, but rather to what Medicare has termed the income-related monthly adjustment amount. This is the amount that higher earners will have to pay in addition to any standard premium typically incurred every month for both their Part B and Part D coverages. Meaning that if you're subject to an IRMAA adjustment, then both the medical insurance portion as well as your prescription drug coverage will cost you more each month. Now, how much more is dependent on your income. And we'll take a look at those numbers in a moment, but we're not necessarily talking about your current income. When Medicare calculates these numbers, they look back 2 years to determine the income amount that will be used to calculate what additional income-related monthly adjustment amount you may have to pay. Well, you might find yourself in a position where your income 2 years ago is no longer an accurate reflection of what you make. If that's the case, then there's good news. Firstly, IRMAA is recalculated every year. So if you had a higher income 2 years ago because of some rather unique situation, there's a good chance that in the future years, when that added income is no longer part of the equation, your IRMAA could be adjusted downward or even eliminated. Another option, if your income has changed in that look-back time frame due to certain life-changing events, could be to file a Form SSA 44. This form, which we'll drop a link to down below, is used to notify the government that though your income may have been higher in the past, there's been a life-changing event, such as a marriage, a divorce, death, or loss of your pension, that has resulted in a decrease in income. By submitting this form, you're basically asking for an appeal, and that the information from a more recent tax year, one since your life-changing event, be used to recalculate the IRMAA you may owe moving forward. Or again, potentially eliminate it altogether. If this situation sounds like you, I would encourage you to submit the form as soon as possible to determine if you may be able to save yourself some money. If you've got other questions about Medicare coverage and what it may cost you, leave us a comment down below and we'll do our very best to address it in a future video. So, we've discussed what, not who, IRMAA is and how it could affect you. But let's take a look at the numbers. Firstly, what is used to determine your income as it relates to IRMAA? Well, Social Security will check with the IRS to calculate your modified adjusted gross income. This is the income number used to decide whether or not you may be subject to the monthly adjusted amount. To calculate your modified adjusted gross income, the IRS uses your adjusted gross income and then adds back in certain tax-exempt income. Now, once that number's been determined, it is what will be used to decide just how much extra you'll have to pay each month. Like so many other things related to taxation and government benefits, the numbers do typically change every year, but to give you an idea of what extra spending you may incur, we'll take a look at the 2021 numbers. As you can see in this chart, your monthly adjusted amounts for Part B and Part D will depend not only on your modified adjusted gross income, but also your tax filing status. For example, if a single person who falls between $88,000 and $111,000, or a married couple filing jointly, that fall between $176,000 and $222,222 in modified adjusted gross income from 2 years ago will pay a monthly adjusted amount of $59.40 for Part B coverage and a monthly adjusted amount of $12.30 for Part D. As you can see, those amounts can go all the way up to $356.40 for Part B and $77.10 a month for Part D as income increases. If you don't want to pay more than you have to, it's important to be aware of this information and to plan accordingly. Hopefully, I've provided you with some valuable information today on what you can expect in the way of cost for your Medicare coverage based on income and how to potentially get some reprieve in the future. If you'd like help determining your plan, we're here for you, and you can find out more about becoming a client by clicking the link right down below in the description. If you know someone else who could benefit from this information, be sure to share it with them. Give this video a like and remember to subscribe to our channel and hit the bell so you don't miss any future tips. And as always, live today, plan for tomorrow.